Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, February 27th. Well, today we got a little bit of economic data, durable good orders, excluding transporting and defense, came lower than expected, still in the negative. So this is showing that less orders means less demand, so demand destruction. This is what Fed usually wants. Data that is showing that economy is cooling down. But the important thing for today, in my opinion, is pending home sales. This is the data for January. So it's data coming from a month in which we were having way lower interest rates than today in this month. So we have to adjust our expectations and our mind for lagging data like this one. So what we got? We got month over month pending home sales way higher than expected. We were expecting 1% and we got 7 points higher. Year over year, still in the negative, but still less negative than the previous one. But let's focus about the month over month because this is a huge increase. So why this happened? Well, as I was mentioning, on January, we were having way less interest rates that affected the mortgages that people were trying to take in order to buy these homes. So now, today, in this month, February, in March, once we got the February pending home sales, we will see the actual demand destruction that today's interest rates are having on the economy. So this is a lagging indicator, but still we are seeing that the fact that when interest rates go lower, when things go back to where they were before, consumer spending is just irrationally high. And that's one of the things you have to take into account because Fed will also watch that. As soon as they decrease interest rates, inflation will go up again. So this is not something you want to see because as soon as things get better a little bit, consumer spending will just jump over everything and continue spending like crazy. And we cannot allow that in these inflationary circumstances. So still, pending home sales way higher than expected because lower interest rates in January. Expect way lower pending home sales in February once in March we got the month over month data. Apart from that, nothing spectacular, nothing new. What did the market do? So basically, sorry, it's not that one. I think it's this one. So it's, yeah. So basically, this is the open, this is the Nasdaq. We started, let's take a look first at the 5-minute overnight. Look at this. This is yesterday's price action, last week's, sorry. And we just held everything, settlement, prior close, we were consolidating. And once the market opened for UK London Open, look at this, big volume, big demand, big spike. Take a look at this pivot that I have here, pre-market pivot. And we just went into the open super bullish. We were like, I think it was like almost 2%. We were into the open, no, 1%. So that 1%, we tried to go higher, but be careful with this red zone that I have charted in here because it's actually the previous resistance, was demand, was support. And now we went lower, we broke down, we are trying to consolidate in this range of the 200 moving average on the daily chart, super important. And this zone is going to be the battle zone. It's going to be a war zone for bears and bulls trying to hold the market and all that stuff that we all love. So look at this. Basically, today we are holding. It's quite surprising. I took not this short. This was unexpected for me. I took shorts down here. I'm still short biased, but look at this. This pivot that I was mentioning, look at this. This is providing support. 12,008, sorry, 12,080, 12,100 right now with the point of control at the low of day with this volume profile. I mean, this is not looking bad for bulls. And I'm starting to realize that now that maybe we are pricing in the 50 basis points, that's something you have to take into account because I'm starting to turn bullish a little bit. It all depends on this pivot. If we break out again this pivot, I will just see this as lower low, pullback, bounce of the 200 moving average. That's super important. And I will just, above these levels, I will just take longs. I think that's one of my key takeaways of today's price action. Because this is something weird. As you can see, we are holding. We were quite in the green already, and we are holding these levels. So from a technical standpoint, this is looking bullish. So sometimes, look at this push. Sometimes you just have to admit and to really hear what markets are trying to tell you. So about this pivot, it's game on for bulls for today's price action. So we'll see. What else I consider interesting? Dollar. Dollar, we are seeing this rejection of 105. We got the target, but well, quite a nice rejection, isn't it? Yields are in the red. We are still super high. So it's just a matter of waiting for new data. So let's focus on new data. Let's establish the fact today that Nasdaq is quite strong, is holding. XLY consumer discretionary is 1.32%. And two of the sectors that are defensive, XLU utilities and XLP staples, are in the red. So taking that into account, I think we have to check the FedWatch tool to see if there's any change in the analyst expectations regarding interest rates. 25% of people, analysts, think about 50 basis points. Still, the majority is 75% for 25. That's good, but look at this, 525, 550, I think is going to be the terminal rate right now for all kind of analysts. So 25, next one in March, 25 in May, and another 25 in June. And in July, we will stay at 0. Any kind of economic data that we got that is against these kind of expectations from the market will cause the market to sell off. The first thing that we need to watch tomorrow is continuing prices on house price and consumer confidence. Chicago PMI is also interesting to see the manufacturing. But on Wednesday, ISM manufacturing PMI is going to be key to really understand if the manufacturing is showing signs of cooling down. And on Thursday, we have, this is not the unemployment on US, this is the non-manufacturing PMI on Friday. So this week is all about, it's all about basically services PMI and all this kind of manufacturing stuff, that new orders, employment, all these kind of things. PMI is super important this week. Apart from that, I think it's a quite technical week, that after last week that was the worst week of the markets this year, since the start of 2023, we are seeing a rejection, looks like. This week, I think, is all about technicals. You guys you have to really think about all these details. The fact that we are holding this pre-market pivot, we are holding these levels, we are green across the board, except for Meta. I think it's a good sign for bulls, and it's something you have to respect as a bear. As a bear, I was bearish today. I'm starting to think twice about shorting this market because this market it's holding. It's trying to hold and maybe go higher. It tried up here. It was rejected, but it's holding this rejection. So think about all these things because I think this week is all about PMI, all the fundamentals, but overall it's 75% of technicals. And this pivot for me is key. I will turn bullish if we break out again above 12,243 pivot. This pivot is key for me this week. So that's all from my side. Thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. I appreciate your support, everyone. But please stay tuned for new videos. I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time as always, but remember the trading day is not over yet. We are seeing signs of bullishness, but anything can happen in this market. Be careful. Discipline and risk management are your best friends and are key for success. Stay safe, everyone, and see you tomorrow.